talk a little bit about the German high yield markets, a trend that we've seen pick up over the last couple of months' time, and I'm keen to understand why that is and what your expectations are with regards to the future.
Well, I think the first thing is that the stigma of high yield bonds, junk bonds they used to be called, but they're not anymore, has worn off, and people realise that good credits, they may not be investment grade status, but good underlying businesses can raise money in those markets without, as I say, any stigma being attached. And it's also good because you're getting very strong businesses in Germany, which are not private equity owned, issuing in the market and being quite well advised and sensible about the terms on which they're asking issuers to invest, not just in terms of price, but investor protection through the covenant package. And that is helping to actually drag the European market away from an element of domination by the private equity owned issuers, who are terribly aggressive, of course. They know their business inside out, and perhaps investor protection in those instruments is not as high.
Okay, and now that stigma has been sort of moved to the side, do you think that this is something we're going to see going forward, or is there a finite period where we see high yield bonds playing such an active role?
I think it will go forward. I think, as I say, that stigma has been lost, and certainly issuance this year has definitely helped that, and therefore it will tempt other issuers who were previously a bit snobbish about it, to be honest, into it, and particularly at a time when bank loan lending is drying up because banks have their own problems, and this is a whole new market for them, which they should welcome, and as I say, they can do so without feeling in the least bit embarrassed about it.